Hello and welcome to the channel. I appreciate you stopping by for a visit. Today we will look at my portfolio holdings that are reporting Q2 earnings for week 35, covering August 25th through August 29th of 2025. Both Nvidia and HPQ report Q2 2025 earnings on Wednesday, August 27th after the market close. For these two companies, we'll examine the revenue and earnings estimates and the options market implied move. We'll review the current price charts, looking at relative strength and momentum indicators. Let's get started. If we take a quick look at the earnings spreadsheet for those companies that have already reported, which has been a total of 39 companies, 32 have beat, with a beat rate of 82% on revenue. And for earnings, we've had 31 that were in line or beat for a total of 79%. On the revenue, the reported revenue was down 1.8% compared to that which was expected. And on the earnings, they outperformed by 6.7%. For the price action, the initial response was 49% that advanced or was positive with price action. 1 week later, that moved to 62%, and 2 weeks later was at 64%. Johnson & Johnson beat on the top and bottom lines and raised their guidance. They had a calculated implied move of plus or minus 3.1%. The initial response was about 6.2%. 1 week later, it was closer to 9%, and 2 weeks later, settled in about 8%. UPS beat on the top line, missed on the bottom line, and pulled their guidance. They had an implied move of plus or minus 7.1%. The initial response was down almost 11%. 1 week later was almost down 17%. And then 2 weeks later was 13.4%. Qualcomm beat on the top and bottom line and also raised their guidance. The implied move was 7.1%. They were down about 7% for the initial response, 8% 1 week later, and then 2 weeks later they were almost back to even. Amazon also beat on the top and bottom line, had an implied move of plus or minus 5.4%. The initial response was down about 8%. 1 week later, around 5%, and then 2 weeks later, they were back to within 1.3% of their pre-earnings price. LYB, LyondellBasell, had an implied move of 8.6%. They were down nearly 8% for the initial response, 15.3% 1 week later, and then it recovered about 50% of that, down 7.9% 2 weeks later. Uber beat on the revenue line, missed on earnings, had an implied move of 7.8%. The initial response was actually quite muted. They were only down 0.2%. 1 week later, they were back up 1.6%, and then 2 weeks later, nearly 5%. Lyft missed on revenue, beat on earnings. They had an implied move of 14.3%. The initial response was also muted at 1.57% to the upside, 4.5% 1 week later, and 2 weeks later they were at 13.01% to the upside. Then finally, Rocket Lab beat on revenue, missed on earnings, at an implied move of plus or minus 13.9%. Once again, the initial response was quite muted. They were up a little over 1%. 1 week later, they were down 3.17%, and then pretty much back to their pre-earnings price 2 weeks later. As we move into earnings, I always like to keep the market conditions in mind. So let's take a look at the major indexes for the past week. Small caps actually outperformed, moving up 3.45%, followed by the transportation at nearly 3%. Mid caps were up just a little over 2.5%. Dow Jones Industrial was up 1.5%. The S&P 500 was up about 0.25%, followed by the semiconductor index, which was just about even, and then the NASDAQ was actually down nearly 1% from the week prior. If we look at the S&P 500, we were down 5 days in a row up to the Jackson Hole speech by the Fed Chair Powell, which really moved the markets up about 1.5% on Friday. What was interesting about that is the markets had already priced in 2 cuts, and it still looks like we're going to get 2 cuts. But that speech did move the markets quite a bit higher after declining for the prior week. I think there is still more risk to the upside than there is to the downside. We have the 50-day moving average, which is currently sitting at 6269.55 at the moment. I think that could possibly come into play. We also have this resistance line sitting here at 61.44 from February 19th high. And then I pointed this out on several occasions in prior videos that we have a price shelf sitting here between about 59.50 and 60.75 or so that would serve as the next level of support. September tends to be one of our weakest months of the year. Over the last 13 years, the S&P has closed higher in September only 46% of the time, with a average drawdown of about 1.2%. So I think we do have more risk to the downside than the upside over the next 6 weeks or so. We also have the VIX, which really declined on Friday. We're currently sitting in around 14.28. So not much fear built into the markets at the moment. We have been as low as 12.77 over the last 1 year.
Nvidia is scheduled to report second quarter earnings on Wednesday, August 27th after the market close. In the previous quarter, Nvidia reported revenue of $44.06 billion, beating revenue estimates by $813.47 million. Nvidia reported earnings of 81 cents per share, beating estimates by 6 cents. For this quarter, the revenue estimate is $46.00 billion with earnings of $1.01 per share. Over the last 90 days, 17 analysts raised estimates and 17 analysts lowered estimates. Nvidia meets or beats analysts' 1-year forward estimates 91% of the time. Nvidia is showing positive relative strength going into the earnings. The options market is pricing an implied move of plus or minus 6.9%.
We look at the Nvidia 1-year daily price chart. We can see that they broke out above a top that was about 152 back in November, and then again at the beginning of this year, and then at the end of January they were around that price. They broke out above that, and since that point they've moved up about 16.47%. They're currently trading below their 20-day moving average, which is upward sloping, their 50-day moving average, which is upward sloping, and the 200-day, which is also upward sloping. We did have a 50-day cross above the 200-day on June the 27th. We do have positive RSI currently sitting at 55.63. We also have a positive PPO, which crossed above the center line at the beginning of May, reached its peak at about the second or third week of May. Since that point, we have had an upward sloping price movement, but we do have a little bit of negative divergence where we are losing relative strength and we are losing momentum. On the upside, we are currently at a 52-week high on the accumulation line, so the accumulation is looking very strong for Nvidia. Overall, I think the risk is to the downside. I don't expect a large rise in price at this particular time. That's my opinion. You can take that for what it's worth, but I'm not looking for much more upside at this point.
HP is scheduled to report second quarter earnings on Wednesday, August 27th after the market close. In the previous quarter, HPQ reported revenue of $13.22 billion, beating revenue estimates by $96.49 million. HPQ reported earnings of 71 cents per share, missing estimates by 9 cents. For this quarter, the revenue estimate is $13.71 billion with earnings of 75 cents per share. Over the last 90 days, no analysts raised estimates and 12 analysts lowered estimates. HPQ meets or beats analysts' one-year forward estimates 100% of the time. HPQ is showing positive relative strength going into the earnings. The options market is pricing an implied move of plus or minus 6.9%.
The HPQ one-year daily price chart shows that HPQ had reached a high of about 38.62 at the end of November. Since that time, we've had declining price action. Recently broke out above that on Friday with the Fed chair speech. They are trading below their 200-day moving average since the end of February. Haven't regained that since. They are trading above upward sloping 20-day and 50-day moving average. They do have positive RSI currently sitting at 65.98. They do have positive PPO above the midpoint and currently expanding at the moment. Back in March through early part of May, they did have quite a bit of accumulation. Since that point, they pretty much traded down slightly in the accumulation. Overall, HPQ is showing positive relative strength as it moves into the earnings. It'll be very interesting to see their earnings and the result of any tariff impacts that they might be having. That wraps up the review of company earnings for my portfolio holdings this week. If you find this video helpful, I request that you subscribe to the channel for alerts on future videos. I would also appreciate a like on the video to help support this channel. Once again, thank you for stopping by today. I wish you well and remember to trade well.